What is going on, guys? How's everybody doing? Yet another week again for us to analyze the market and then see what we can expect for the rest of the week and then the coming weeks. As usual, I always like to visit Forex Factory. So apparently today is a very important day for us. 7 p.m. we have FOMC, which is US interest rate announcement. So there's a lot we can actually look at, regarding that. There's a lot we can definitely discuss. There's a lot we can delve into, and I think it's going to be interesting. More so, it's like the last FOMC for the year. Somebody says this is the class you can never afford to miss. Yeah, I really believe so. If you've been joining this session for the past 1 month already, trust me, you should have learned a lot, because most of the analysis we drop here, they play out, which is like a bonus for you. You can learn and earn alongside, all the free trades that are dropped. We'll go over some of them, the BTC calls, GBP USD, literally all the calls. They like 90% of the time move in the direction that I speculated, analyzed, and shared with you. Number one is exactly what we have here with GBP USD. Last week, I told you guys that I was expecting this break, and I was actually expecting that it was going to continue, lower up to even like this point. But that didn't seem to have happened. But it shouldn't even be a shock to you that it didn't happen. Why? Because I also introduced to you the fact that we always have the path of least resistance, which is like the minute turning point you see in the market. So they can always be like a blockade for the market from progressing to subsequent levels, and this is like a typical example, and you can see that, right? So I saw that some really, really smart traders still managed to catch some buys on this, and then this buy is happening, I think, when was it? Was it just yesterday? This buy is on this move 2 days ago, actually, 2 days ago. And then 2 days ago, all you could have just done is that after this closure, right, if you remember what I taught you last week, right, if you want to like zoom into that zone where the market is hitting the previous level, and then start observing, market structure and price action within that range, right? And then you can see what last high, low, came back, equal low, right? Because it's like here, this week here, this week here, and then goes back, take this high out, and then from there it never looks back again. So I think I went deeply into explaining this last week. Those that are really, really like taking this session seriously must have benefited or profited from that. If you didn't, you're not too late to start learning, right? So yeah, that explains why I'm saying that even though I was expecting that it was going to come all the way down, we have it up here. Now, what can we say about it with where it is now? That's the tricky part, because today at 7 p.m. GMT, we have FOMC, and FOMC basically represents the interest rate announcement for the United States. Currently, the United States is the Fed, right, which controls the monetary policy of the United States. They are basically like cutting interest rates, right? And the current interest rate in the US is what, 4.75, and speculators, big corporations, investors, they're expecting that the interest rate is going to cut to what, 4.5, which is like literally by 25 basis points, which is significant. I always explain to you that when it comes to the Western world, even a percent, even like a half a percent means the world to people, because at that point they are not looking at like small numbers. We're looking at huge investment inflows. So if you're cutting interest rate by 25 basis points, it can be like a strong decision for somebody to absolutely want to pull out of your economy, because at the end of the day, the world runs on opportunities and money. And opportunity cost is like what benefit you get from one side by taking a decision on the other side. So if I have to put my money in a stronger economy, like let's say, this just by example, Japan, or in China or Russia, and then they're going to pay me interest rate of 10%, 18%, and then I have to put that same money into USD bonds and treasuries, and they pay me 4.75, and now they want to reduce it to 4.5. As an investor, what will be like the primary decision you're going to make? So that will be like something that we can tell if it's going to directly affect the market or indirectly affect. But we also know that when it comes to the aspect of interest rates, right, it doesn't always work alone, right? I've said here times without numbers that interest rate moves hand in hand with what? Inflation, right? Interest rate moves hand in hand with inflation. So, for example, if interest rate is, let's say, let's still use the same one. If interest rate is 4.75, and then inflation is, let's say, 3%, and then they're trying to reduce interest rate to 4.5, right? What will be the implication, or what will they seek to achieve, right? Inflation wise, what will they seek to achieve? Do you know what they will seek to achieve? What do you guys think is going to seek to achieve? Let me see those who are fundamentally endowed or knowledgeable in our field. Somebody say a reduction in inflation. How so? How so would it particularly reduce inflation? How so would it particularly reduce inflation? So if interest rate is 4.75, taking money out of the people's hands. Somebody says inflation would be 2.84, let's say, or let's say 2.85%, right? What's the motivation? What would this seek to achieve when we have inflation at 2.85? Because think about it this way, right? Think about it before you give your answers. Interest rate is the money that you're paid for putting your money away, right? And so if it is reduced, that means that people are demotivated to save, right? And if people are demotivated to save, right, then they have a lot of money to spend. And if they have a lot of money to spend, then why do you say that the interest rate is going to be 2.85, because at that point, I mean, the inflation is 2.85, because at that point, then inflation is shrinking. It's like, okay, the economy is under control. Somebody say we have GBP CPI at 7. I normally don't trade CPI for pound and any other. I only just focus on the USD crosses, right? So in this situation, I would expect that with reduced interest rates, then we'll rather see inflation somewhat increasing. They want people to spend money. There's going to be high inflation next year on January. Exactly. Now, so see, what I'm just trying to drive your mind towards, right, in this example is that even though interest rate is being cut, right, investors are not going to directly just think about the implication of just the interest rates. They are going to think about the future implication of it. They're not going to think about the present implication alone. They're going to think about the future implication. So if the future implication is telling them that it's also going to cause an inflationary pressure, then automatically they're thinking about what? Weakness in the dollar. Now, if there is weakness in the dollar, right, then what will we expect happen? We'll see GBP USD fly up, and then we could potentially also see Euro USD, right? Euro USD do what? Fly up, and then we could also see XAU USD also do what? Also fly up, right? That's when the volatility is out. Somebody says, so are they inversely proportional? They are not exactly inversely proportional. I'll tell you the truth. It depends on the angle you're looking at it from. Because if you take it from the inflation point of view in the first place, right? If inflation is, let's say, if let's start with inflation. It depends on where you're starting with it from, right? If inflation is rather, let's say 4%, and then interest rate is, let's say 5%, right? And then inflation increases to 6%, right? Then you normally want to get interest rate to, let's say 6% as well, or let's say 7%. Because at that point, with inflation increasing, then you have interest rates to reduce, the money that is floating around. But when you have interest rates rather increasing, right, then it's kind of like implying that it could rather increase the inflationary pressure. One is as a result of the other. It's not like they move indirectly together. Inflation would normally affect the decision that is made on interest rate increase or not. But interest rate increase or not cannot, or let me put it this way, interest rate increase could be like a solution to solve inflation. But interest rate increase, inflation increase or decrease would not necessarily mean that interest rate must also increase or decrease. One is as a result of the other. So in the directly proportional aspect, if you're looking at it from the interest rate, inflation first, then it kind of makes sense. But if you're taking it from the interest rate first, let's say if we increase interest rates now, what do? We would normally see inflationary pressure. What am I saying? Inflationary tightening. So it's a little bit, tricky. That's why, right, so many people absolutely avoid trading CPI and then FOMC, because the resultant meanings can be absolutely overwhelming, and then you actually not even know if, okay, is this thing going to mean positive or is it going to mean negative? So that's why I always say that for me, what I do, right, is I basically would wait. Wait. When the news comes, I just refresh this page, and then I see that, okay, indeed, interest rate has been cut. Then I watch the market quickly. What is the effect? Okay, it's actually pushing this market upwards, right? I see a solid gains. Then the moment I see that solid gains, then what do I do? The moment I see that solid gains, right? Let's say I see a solid gains like this, right? And then the gains started, let's say, from here. But I'm anticipating that it could continue even further up to, let's say, somewhere here, right? Then I would buy into it. I'll quickly just buy into it because it's like news, the volatility is just high, But obviously, like I said, I gave you a basis of thinking about how to manage risk when it comes to fundamental. And I told you that one of the best ways to manage risk when it comes to fundamental is, let's say you have an account of $10,000, and then you feel like trading FOMC today, right? And then like with your $10,000 already, your risk per trade is, let's say, 3%, right? Which is equal to what? $300, isn't it? I'd advise that put the 300 into a separate account, and that kind of makes up for what? Your stop loss in pips. So at that point, even if like this thing starts going up and suddenly like it pushes down like this, all that was just left was gone in your account is that 300, and you don't have anything to cry about. You take it as if you just took one trade and then the trade hit stop loss, rather than putting like that trade on the whole 10,000, right? On this whole 10,000, and suddenly like the market just becomes overwhelming, and then you don't know what to do, and then you lose a lot of money than you anticipated. So always follow this principle. It's the best way to save your psychology. But yeah, that's how normally I go about it. So that's my expectation, for FOMC overall. Like this my bias. I just keep it this way. We'll see how it evolves as well, by the way, right? So we have to like be patient to watch what the real data is, and then how it's going to inform us on what decision to actually take. From here, what can we look at as well? We can look at the XY. I think this was what I left for you guys with respect to the XY last week, right? This is what I left for you guys with respect to the XY last week. And indeed, like it was literally like conforming, playing along in that same direction. So my expectation was last week we were here, right? Last week we were here, somewhere around here, and I was saying that, okay, looking at the XY, I was expecting that it was just going to break up there like that, and indeed, we saw it happen. And then when we saw that happen, we equally saw GBP USD also trade downward. So that's like coming from the thesis of chart patterns, and then I think I took time to explain chart patterns for you guys, right? So if all that I'm saying about the interest rate and then my expectation is right, then it kind of makes sense for us to also expect that the dollar index is going to it's going to drop, right? Now this speculation has been going on for a while with respect to the interest rate cuts, right? I've watched a lot of like documentaries, I've watched a lot of takes from people whose opinion really matter, in terms of the market, and then all of them keep asserting the fact that they're expecting that interest rate interest rate cuts, because it's like there was a period in time where the Federal Reserve, or the Fed as we know them to be, of the United States, like sometimes they can just be in we have something we call hawkish and dovish, right? Hawkish is when they start like increasing interest rates, like, so for a period in time all you're seeing is just like, interest rates increase. I can show you a bit of that on one of the websites that I used to find major trading economic data as well, right? So it gives us all the data about US, and then we can watch inflation rate, GBP. Let's go to interest rate. Let's go to United States, and then let's focus on the interest rate. Right, so do you see here? Let me come to let's say 5 years. Yeah, so when we say the US or the Fed is hawkish, then it means that what? See here, from 2022, do you see? I guys see what I'm showing you though? Look at the chart, it's very important. The 0.25, then it goes to 0.5, then it maintains 0.5 for a while, then the next month it goes to what? 1%, it maintains 1%, then it goes to 1.75, then it goes to 2.5, then it maintains 2.5 for another month, then the next month it goes to a 3.25, then it maintains a little bit, then goes to what? 4%, then it maintains and goes to 4.5, then it maintains go to 4.75, 5%, maintains 5%, 5.25, then 5.5, and it has actually been stable from 5.5 for the past like 1 year, which is like July 2023, all through to literally August 2024, which is again July, August 2024, and then they started cutting rates from 5.5 to 5, and now 4.75, and people are now speculating that it's going to 4.5. So there is a history to it, right? There's a history to the data that I'm showing you. Somebody said, what's the name of the website? I share with you, don't worry. There's a history to, if you watch that. So like that's what I'm using to explain the fact that we have like that hawkish movement in the market, and then the dovish, right? And so if the Fed is in the dovish, then it means that all the time traders or investment bank or hedge funds, and then central bank speculators, traders, they're expecting that they're going to continuously be cutting interest rates all like that. So the moment they start cutting interest rates in that sequence, then there's a big trouble for the dollar index, right? Let me watch it on the weekly time frame, right? So you can see that even as we speak now, the dollar index is here, right? It's actually sitting on this huge resistance here, even though it kind of formed this candle pattern here, right? It kind of formed this candle pattern here, which signifies like, a continuous bullish, and I think that if it actually would break out, right? If it actually would break out from here and then perhaps even continue upwards, right? Then it means that the Fed chairman Powell and then his committee of 8 or 9 members would overwhelmingly surprise traders. And surprising traders is when everybody's expecting like, okay, Fed is going to cut rate from 4.5 to 5. 4.75 to 5, 4.5. Then suddenly they increase the interest rate to, let's say, 5.9 or 6. It's actually going to be crazy. And that's where you'd see like the DXY blast through. And I think that, you never know. We can be surprised in that manner, And normally for me, right, when it comes to like the way I speculate on the market in terms of infusing my technicals with fundamental, look at the way I'm explaining the fundamental gradually to you. I normally want to the precedent of my basis of determining the direction to be the technical first before the fundamental, and I think it will take a while for most of you to grasp that, right? It will take a while for most of you to understand what I just said, but especially for people that don't like learning, especially for traders that just want to make money, all they care about is, are we buying or selling? It will never make sense to them. But if you're really a studious person and you care about, just understanding how the market works, and then just really care about just like, understanding the implication of fundamental decisions, then I just said that what, for me, I like the precedent for determining the overall direction of the market should be first induced by technical structure before being backed by the fundamental. So what I mean is that I would watch, let's say like this formation here, and then with this formation informing me that, look, we just kind of made some beautiful morning star formation, and then normally if I should have found this morning star on a bearish level, right, which is like at the base level of the market, then I would have no expectation than to find it like continuing upward. But now I'm finding it at the resistance level, right? By the end of the day, the implication is still the same, like the patterns never change, so if indeed the pattern is supposed to like materialize the way it's supposed to, then we're going to have this candle break out, right, and then perhaps go up. Now if we're going to have this candle break out and go up, what would necessitate it to break out and go up? And that is where my speculation of the fundamental will come in and say, for that to happen, then we may have to have the Federal Open Market Committee pull up a huge surprise on us, which is like, rather than investors expecting them to cut interest rate from 4.75 to 4.5, then they'll rather increase it to like, let's say 5.5. Then the market would just go haywire. And normally it happens to always be right. Normally it happens to almost always be right, 95% of the time, even though 99. So it's like the way I did my technical analysis for Bitcoin, right? And then I saw that, okay, Bitcoin is going to rise up. The technical analysis from the chart pattern point of view, candlestick pattern, from all the literally technical knowledge that I had was showing that it was going to go up. But now I needed to just understand what would make it, or what would necessitate it to go up in that way, right? Then that means that I have to now put my ears on the ground and start, fishing and listening to, what is going on in the airwaves, only for me to realize that it was not so long until the SEC, right, the Securities and Exchange Commission of the United States, approved of Bitcoin ETFs, which is a Bitcoin exchange traded fund, which allowed institutions to now get involved, because formerly institutions, right, well-recognized and regulated institutions in the United States were not allowed to get involved in the whole Bitcoin and cryptocurrency market. But with that regulation, then it allowed them to actually form funds that are going to now trade and then keep investors fund. And that was just a perfect sync with the technical structure to allow Bitcoin to fly out. And that's what we're still enjoying till now, with like big players like what's the name, BlackRock, and then even MicroStrategy insanely purchasing. So that was like a perfect sync of technical analysis, dancing the perfect tune, or being in sync with fundamental. So that's just like, this is what we call thesis, right? In trading we call this thesis, right? Thesis. I mean, if you schooled, or if you did your master's, or even like your first degree, you must have done your research work, and in research work you produce thesis, right? Thesis is like your assumptions for making a valid conclusion. So based on my assumptions, with all that I've told you and the technical knowledge, and my valid conclusion is that, okay, looking at this and this and this, if this should do this, then the resultant effect is this, right? And then you as a trader, your thesis guides you in making like long-term decisions. So this is like something that you can just keep at the back of your mind. At the end of the day, like you just need that perspective and then still come down to a lower time frame to make a trading decision, because it's not as if any of us here are or the name hedge fund managers, or any of us here are institutional traders or position traders that are going to hold trade for like 1 month, 2 months, or even 1 year. So yeah, we'll just keep that perspective the way that I have just explained to you now, right? We can switch on to trades like GBP Swiss franc, which has currently no fundamental bearings, right? And for a position like this, I would have not really expected that blast through before I'd like start speculating, because normally I want to see the market really like just start playing off around here, you know, beneath that range. So if we had rather seen, let's say, the candle start forming below here, just, you know, doing all that zigzag, then I would now, you know, after seeing that bearish confirmation, would want to rather be interested in taking that short position and expect this to come down, right? And then have us see beautiful trades like this. But currently, with how it is positioned, right, it makes it very tricky for any of us to even make any trading decision at the moment, right? Some people will say took out liquidity, because there are two levels to it though, right? Let's not be blinded. There's like one level here, and then there's another level here. Well, and then we can also investigate again, right? So that's why sometimes you have to always open your eyes in the market. Another one here, but it didn't quite get to that point, and then we just like pulled back like that, right? And if you remember something that I just told you guys to, right? So this one now we can clearly see that it's just hanging in the mid range. It did not perfectly, you know, respect any resistance region or any short volatility range. So in that sense, what would I expect? I definitely expect this to make a pushback up, right? Perhaps maybe this time rather tap on this level before like now coming down. So making a pushback up means that what you as a trader, your only obligation is to just not get involved, fold your arms, and then wait for that price action to play out. And many a times you get people going ahead of themselves in things like that. They'll start shorting and they're gonna get a sniper buy, right? Do you know what a sniper buy is? Sniper buy is one of the most wicked, you know, entry positions you're gonna ever want to put yourself. Who wants me to demonstrate how a sniper buy is? You guys know a sniper buy? You guys know a sniper buy though? Let me show you a sniper buy. A sniper buy is when you've seen a position like this and you're easily thinking, okay, this is going to continue downwards. Let me sell here. And then you put your stop loss maybe here or whatever it is, right? Then suddenly, the candle rather does what? Rather goes up. So you have what? You have your sell position here. You have your sell position here, right? You have your sell position here. Then instead of the market continuing, right, then the candles rather does what? Push up like that. Then another one comes again and push up like that. And then your entry is looking super clean on that bottom. But instead of it being for a sell, right? I mean, instead of it being for a buy, which would have meant that you are making money, it's for a sell. You know? So you're losing money. So we will call it sniper buy. It's a jargon that me and the boys coin when we fall in such traps. We used to really fall a lot in such traps. You understand me? No, it's very funny. Like when it happens to you, it's not even just about me laughing. Unless you've never experienced it before. Let me see those who have really experienced it before. Where Kema traces sniper buy into poverty. No, for real though. Instead of like having that sniper entry to make money, then you're rather having sniper into poverty, because like everybody's supposed to be excited that, wow, guys, look, I got the entry at the very bottom. You're supposed to be proud and take a screenshot, but you're gonna take a screenshot, and your and your position is like the inverse of what is supposed to be. So like that's why I keep saying that in situations like this, for me, I'd rather like stay away and then let the market like evolve, revert back, and then I take those trading decisions. Yesterday, BTC gave me did BTC give you a sniper buy or what? So we have sniper buy and we have sniper sell though. It's not only for sniper buys. So a sniper sell will be a situation where a trader will see a situation like, let's say let me show you. Let's say this, right? And then they would think that, okay, at this point, the market would easily like continue up to this point, right? And then they're going to what? They're going to buy here. The moment they buy here, then it's all happened. Then the market just like reverses up to this point, right? So they have their buy position there. Beautiful, beautiful, beautiful buy position. But it's at the top of what? It's at the top of the market reversing. Then you see that buy the nice one, but the market just tanked. So it's not only sniper buy. So this is a perfect sniper sell position for a buy trade, and then a sniper buy, just like I explained. So like I said, it's a jargon me and the boys coined, and we make fun of each other when you make that mistake, right? So it should be a jargon in the community now. I've finally introduced it to you. So if you want to tease your friend, and then you know that maybe they have a community, or you guys are making a trade decision, you're analyzing your market together, and then they take a trade, and instead of the thing going in the direction it reverses, can just give them thumbs up for that beautiful sniper buy or sniper sell trade. So you don't want to always fall in that category, and then not wanting to fall in it is, just being very patient and letting market evolve. Being patient and letting market evolve. So that's like the perspective that I'll give you for this one that I've established here. So for now, I will just like wait, right? I don't care how far it wants to go. I'll just wait. I want to see it really like play out the way I have explained here. Let's move on to another one. This is GBP JPY. So there's a lot actually going on in Japan, right? Quite recently, they're recovering strongly. The economy is beginning to like pick up. Japan is like the new money for investors. Everybody wants to like tap into the economy now. They started increasing their interest rates. They had not increased their interest rates for so many decades. We call them the lost decades. And then beginning like now, they're beginning to like put in some measures that is reviving the economy. Japan is beginning to be spoken about again. You hardly ever hear anything about Japan these days, in the global market, but they're beginning to like open up again, except for tourism. Quite recently, people go to Japan a lot for tourism, and then if people are beginning to go into your country for tourism, then you should understand that you're literally attracting foreign exchange, and attracting foreign exchange means that it makes your currency very competitive. So there's talks about, Japan. That's how we've seen so many, especially like with this one that I explained to you here, with this huge move here. That was like Bank of Japan, BOJ, pulling a huge surprise, in the investor market. Nobody saw this coming. Out of nowhere, they just increased interest rates. So looking at this formation and structure right here, what I can see, straight off from the top of my head, I just see like what some type of a wedge structure here, right? Some type of a wedge structure here, right? That's just what I see now, and I kind of perceive that some way, somehow, it's not going to be so long until that wedge structure is broken. Maybe not directly like this, right? What I perceive again is that it will probably like just push up for the last time, maybe come back to test this level, right? Come back to test this level, and then if it holds strongly, right, we could see like a push up, tap into that place, reject, and then like drop like that. But maybe it will also be on the back of something, fundamental or some news announcement or something, right? But let's wait and see how it transpires. But this is like, it's similar to what I was showing you guys last week on GBP USD, if you remember, right? I marked this level and then this level like that, and I said that I was expecting it to like drop like that, and lo and behold, that was exactly what happened, right? So normally when you have like the market in a tight range like that, right? Normally when you have the market in a tight range like that, that's like the resultant effect. That's like what tends to happen. Someone said there's GBP news. There's GBP news at what is this 7, 8, 9, 10, 11, which is like just some few minutes from here. But I don't actually trade, pound CPI, what's the name? It's Canadian CPI. Wait, sorry, today's Tuesday. CPI year on year 2.3. Truth of the matter, I'm gonna be honest with you. The pound, in terms of their fundamental, they've not really been shaking the market like they used to anymore. They've not really been very like aggressive like they used to. You can just like do a brief back test and then scan through and see that when did you last see like a wild move. Let me show you like a typical move of what I'm talking about. I'd have to probably go a little further, like, yeah, even like a move like this, right? See, this was in what, 2022, 20th December 2022, right, where we had like this huge fundamental, that like invoked this volume that we're seeing here. If we go further down again, you're going to see like several other ones that I've not quite seen the last time like we had any like fundamental in the pound that like, okay, we have another one here as well, and you guys see that, big move like that. This one is how many pips? This one alone is 350 pips. That's like very, very huge. We have another one here, right? This is also another 290 pips, almost 300 pips, and a few ones here. There are a few, instances where you see, but it's been a while. Like, okay, we have another one here also in 2023 July, right? So this is how you used to like judge, and even if you want to understand it better, right, you can even, this like a free knowledge to you though, but what you can do is, if you want to really understand market impact and then the fundamental layer companies, like you pick this one like this, you check the date, 27 July 2023, and then you come to Forex Factory and then you go and backdate to 27 July 2023. So how do you do that? You come to 2023 July, April, May, June, July 27th, and then let's apply. And then what do we see? I don't quite see anything that was necessarily affecting. What pair was that? This is GBP JPY. Okay, let me see. Probably coming from the Japanese yen side, not necessarily the because if you look here, Tokyo year-on-year inflation. So maybe that was like what affected it. But like that's one way to learn fundamental though and the impact, right? You skim through the chart like that, right? I've shown you something that you can do and then learn, and then you can just pick this one and say, okay, this candle, what must have influenced it? Was it a fundamental event or whatever it is, and then you use it to learn, right? So it's not always about just coming in and finding what to buy, what to sell, but sometimes you must understand, like you look at this one, like look at this impact here, this huge drop here and then another huge drop here. You can just pick the line again, sit here and then say, what date is it? 29th April 2024. Then you quickly come here on 2024 April 29th. Apply settings. Okay, that was a euro. CPI for monthly. Let me see. Pound Japanese yen, 29th April 2024. 29th April 20. Yeah, so there wasn't quite anything that would necessarily like related to like the Japanese economy or the pound economy, but you can also do like a general Google search and see maybe there was like some geopolitical event. So it's not always like a fundamental news announcement. It could be geopolitics, or it could be like a surprise, a huge surprise. But it's a very interesting practice to maintain. It lets you learn a lot. Let's do last one, then we come to the current market. 11th July 2024. We come to 11 July 2024. So here we can see that what GBP GDP announcement. Could that have been the reason to cause this huge drop? I can't quite tell. But anyway, we have like 10 minutes for the CPI to be released. Maybe it's going to have like a very striking impact. But let's see, right? If it's tradable, we'll definitely trade it. And okay, we move on to pound card. All right, Canadian economy is also a very huge economy, but the pound has been like beating it back to back to back to back, right, for so many months now, because there's a lot of things that are not really going on well in Canada as people would expect. So if you watch here, like all the way from 2023, like the Canadian economy was really doing better against UK, right? Selling off. Suddenly this one was like, I think Russia, Ukraine, suddenly there was a flip, and then the pound has been losing enormously against, the Canadian dollar has been losing enormously against the pound. So currently with where we're sitting, right, this was actually this place presented a very beautiful opportunity for a trade setup though. This place presented a very nice breakout like that, right? So those tiny chart patterns, if you master them, right, and you take them serious, you're going to actually make a lot of money from the market. You're going to actually like benefit a lot. You buy into that breakout, your take profit is even just the next high like that quickly, because it's just straightforward and direct. It just broke out of that wedge. This is like a falling wedge, just broke out of it. Find your entry, put your stop loss beneath the range, you make your money. Now, where do I think it's heading? I think it will continuously push, right? Let me probably watch this a little bit higher. Let's see, like the daily time frame. There's not like much for it to do around here because like there's no resistance anywhere above here. It's like a clear area, right? So with it being a clear area, maybe my only anticipation and speculation is that it's going to continue up. All right, it's going to continue up, maybe up to this point. And if it's going to continue up, then we'll have to like for now wait until it gets there before we can do anything, unless you are very proficient in day trading, right? And if you're very proficient in day trading, like while you're seeing this one, let's say after this closure, you may want to like just jump in here for a buy, put your stop loss beneath the range, 30 pips like that, and then expect. But that one you'd normally make like, let's say some 20, 30, 40 pips, and then you're out. But normally it does play out brilliantly when you even want to like follow up on a trade like that. But first, I'd advise that you want to wait for that particular candle to close, and then you can just quickly jump in like that. Someone say, what chart is this? This is GBP CAD, pound versus the Canadian dollar. Right, that's like my speculation though. So yeah, I mean, it's currently broke out of the Asian session range and it's just trading upwards like that. A good opportunity for you to jump in, but ideally it would be best when the candle closes. More so, we also have like the fundamental just around the corner, so you do your own, you do yourself the favor of waiting for that fundamental to come out before you make any trading decision. And euro pound, I kind of really closed this chart. I don't know why it's still open here. I stopped trading it for a while. I probably only use it for cross-referencing, just the inverse of it, telling me what to expect with the rest of the pound, right? But I hardly like trade it, right? Like I said, I use it like in reference as the way I'll use DXY. So if I mark up my chart and I see that, okay, euro pound has opportunity to go up, then in that way I easily just expect that the rest of the pound, right, which is like GBP, USD, GBP CAD, GBP CHF should be going down. But quite recently, I'll be honest with you, the market has lost that essence of correlation. So you can't rely on that analogy to make a trading decision anymore. These days you have to be very independent. Euro USD, I said it on the back of the FOMC, and FOMC is 7. But before that, we have the CPI for let me come back to today. We have the CPI year on year. It's in the next 4 minutes for GBP, right? In the next 4 minutes for GBP. So let's see how that one plays out. And then we have this one also here, euro CAD, right? This is euro Canadian dollar. One of the pairs that trade smoothly and calmly. If it's going in one direction, it can just keep going in that direction for a long time. Normally, just like Canadian dollar crosses as well, they normally like have that behavior. If they're trading in one direction, they can just maintain that steady direction for a long time. And then those are positions that when you catch them, you don't want to just close, because you close at 20 pips, 30 pips, and you come back and this thing is flying 100 pips, 200 pips, 300, and then you're going to be regretting. So yeah, with this that it has taken off from here, breaking this level that I marked last week, then I also expect that it's going to just like continue in that way to this point. We highlighted gold already. We are back to gold again, but I already told you that due to FOMC, it's a little bit tricky to say anything the least about gold. So let me even remove this arrow. We'll keep it empty, but this is like the framework and the structure we're seeing gold from. So let's see how it also unfolds. Somebody was asking me to check oil, and this is oil. This is still what we did last week. It's been trapped in this range, so this is like a bigger form of a range market, going up, coming down, up, down. There's not much I can say about this unless we find it in a very vital region. in a vital region, we either see it's like trade up, come back to this region and see how it's going to behave here, or trade down and come back to this region and see. But as far as it's hanging in the middle, it's very tricky, to say the least, whether it's going to like go up or come down. So patience, pace, right? Yeah, patience, pace. So let's just keep it that way. BTC, I gave you guys a spectacular trade on BTC last week. I didn't even erase it from the charts. You saw it play out. Who was here last week? And what do you remember from this BTC setup? Do you guys remember first this setup, and did you guys take advantage? First is, do you guys remember? And second is, did you guys take advantage? I know most of you remember, but I don't think a lot of you took advantage. So many of you suffer from analysis paralysis. It's just like they know that the thing is clear, but to take action, they cannot take action. And so yeah, it closed indeed just like the way I was saying, and then took off all the way there like that. So yeah, we're going to take it like that. Today, what am I going to say? We have like the 10,000. This is like me marking up year end, right? So we have a couple of days before the year end, and then we have like the 10,000 mark. The 10,000 mark hanging in somewhere here. I mean, I said 10,000, 110,000, right? Don't get me wrong. You have the 110,000. Look, just some few pips away from 110,000. I really believe that Bitcoin is going to smash that 110,000 before the year ends. I said it on my tweets. I put it on all public forums. So I expect that the next leg of this will just take us to 110,000. Then from there, I don't know what can happen. Maybe like some big crash or whatever, but we'll see how it turns out when it reaches there. But like from here, I expect that, I should see Bitcoin, making some gains back up. Don't be deceived with all these formations and rejections that we're seeing here. As far as you can even see, we are just back to this resistance here that has now become like a support structure for it. So you can just easily rely on this to now make that big move back up. But yeah, so I've seen so many people, trusted people that are on Twitter, people that like, I take a lot of cue from, that are just speculating that there's going to be a big crash. Blah. I don't believe that any of those things is coming off now. I don't think a lot of people really understand or have taken time to understand like the embodiment of Bitcoin as a whole. Don't get me wrong. I don't mean that we cannot see Bitcoin like insanely like losing value speculative wise. We've seen it happen over and over and over. But what I mean is that like when there is that heavy ball, right, a wrecking ball, which is in the momentum or in the direction of Bitcoin, it's not your talks on Twitter that is going to let it start reverting or pausing or you declining, or it's not your opinion, it's not your sentiment, it's not your feelings. A lot of things must come in play, but you get people just using their feelings, just because they want to have the feel of being right. It took me a long time to come out and say I was expecting Bitcoin to hit 100. First, I said 90,000, and I said 100,000, 110,000. And I started saying it like early part of the year, sometime even last year as well. But I didn't just say that because of feelings. I started seeing the signs. First, I said it when Bitcoin was even all the way here, when I did that legendary live stream on Instagram, right? When I did that legendary live stream on Instagram, I used a monthly time frame to do it. When Bitcoin was still trading here, Was still trading at this very bottom here, right? And I said it was going to go up, right? Who remembers that live stream? Who remembers that live stream? I use that as a basis to say something, and this is like a long-term thing. Let me see what happened. Did we have any effect on the pound with the CPI? You see, we had a back and forth type of a thing, right? A zigzag type of a thing. Let me quickly switch to the pound and see what happened. You see, you're not even going to see it on the higher time frame, but when you come to the lower time frame, like the 15 minute, you're going to see that what it just went up and came down, you know, just like that. So if you're using pending orders, you are swept. If you're buying, a reverse. If you're selling, it quickly reverse again. So these are some of the reasons why I don't trade the pound CPI. But let's see what the data was for it. It came out as the forecast. Inflation increased. Inflation increasing means weakness long term for the pound. You know, it's not looking good for the pound. So it means that like I'll kind of expect the pound to be weak for the rest of the day. And then the pound being weak means that with our speculation on the GBP, JPY, we could actually see it happening. And then rather than see this one push back up, we could probably see it come back a little bit, come down a little bit before pushing up and all of that. But yeah, but they didn't really have any striking effect or difference, you know, as such. It didn't really have any strike. We could also see this one like push down a little bit. Yeah, because that's just what the data is saying, right? That's just what the data is saying. But let's switch from there and come back to Bitcoin. Like I said, I already told you guys from here that Bitcoin is going to go up, and I said it from here, even here again and here. I've called it so many times, and that was like from a great lesson that I learned. You know, a very great lesson that I learned. You know, it's already 11. We're going to end soon, but it's just great for me to share some of these stories with you. It's going to guide you, even if not today, tomorrow, 5 years from now, 10 years from now. You're going to remember that there was once Kojo Forex who you joined his live stream, and then he shared a valuable message with you, and it stuck with you forever. Right? In the world where we live in, there's always going to be innovation. There's always going to be technologies that are erupting, and there's always going to be technologies that are dying out. Right? Do you get me? You see those two instances. There's always going to be innovations, technologies that are evolving, erupting, coming up, and the technologies that are going to actually be dying off and out. Right? And you, as a human being, as a trader, as a speculator, you must open your eyes very wide and think through things like as natural as it may be before you make a conclusive decision. So I'll give you first example, and that was like the time where I learned it the hardest. In 2020, right? For the purpose of clarity, I'll switch back to that same instrument, oil, right? You see here, in 2020, due to COVID, oil traded to near zero, right? In some platforms, you're not going to see the near zero, but in some platforms, you're actually going to see like that's zero. It literally, so here you can see that the lowest it hit was $8 per barrel, but the zero is actually somewhere here, right? And oil trading at zero, what does it mean, right? Remember that whatever price is on the global market is what is on the market, the physical market as well. Sometimes people seem to dissociate what is going on the financial market with what is going on in the real world, especially like people that like have that absolute gamble mentality. They think that this is a different world altogether. It's like, I don't know, like they're in a different space altogether. They're not really in a physical world. But yes, whatever is happening here, like I said, is happening in the real world. You understand what I mean? like whatever is happening here is happening in the road. So if you see that the oil price is currently trading at 69.7, it means that a barrel of oil currently on the global market is 69.7. If you see that gold is trading at 2,647, it means that if you want to buy an ounce of gold, that's the price you're going to get. So when oil started trading around zero, it meant that, okay, if I want to buy oil, does that mean I'm actually going to get it for free? But we had just not got to the point where social evolution did not need oil. Aeroplanes still uses oil, trains, some trains, even though there's a lot of electrical trains erupting, but some trains in most of the Asian, North American, and then even the Europe, they still use oil. Shipping vessels, they use oil. Manufacturing industries, they use oil. And cars on our roads, and even in our homes, our generators. So there's a lot of use for oil that it will just drop all the way to zero and then not come back up. It only dropped because due to COVID and lockdown, all of these corporations were on a halt. Planes were not flying, shipping vessels were not on the sea, manufacturing productions were closed down, cars were not on the road. So normally the supply became overwhelmingly too much than the demand. And in terms of the world, which deals primarily on supply and demand, because none of those oil rigs and production sites cut their production just because it's COVID, then they close it. You cannot close it like that. It doesn't work like that. Once you've opened the pipeline, it's like opening your tap and then the tap is locked, right? You cannot close the tap. And then what's the name? Just because that you have only 3 buckets in the house, you bring bucket 1 to fill it up, bucket 2, bucket 3, and you think that just because the 3 buckets are full, the rest of the water should not spill off. No, they will continuously spill off. They'll probably flood your house. So they couldn't stop that production. They kept, piling up the barrels, and then nobody is buying them. And then it becoming almost worthless. And that was just what happened with that drop. But that drop also provided another opportunity for some insane group of traders to make enormous money from the UK. You can research about them because they understood that we had not got to that social evolution where the use of oil was irrelevant. So they started buying oil futures. And the price started rallying up. And that's where we saw oil trade all the way to what? Highest of what? $126 per barrel, and currently we have it at $67 per barrel. I'm saying that in relation to crypto, which is Bitcoin, is that we've had so many people say, oh, Bitcoin is going to come to zero. Bitcoin's come to this. Bitcoin's come to this. For anybody who has that type of mindset, they are living in la la land. Because the social evolution has changed. Technology has changed. That person has probably never used Bitcoin to do a transaction before. The seamlessness, the effortlessness, the permissionless of Bitcoin has made it such a wholesome and attractive technology that the world, as we have it now, cannot almost do away without it. Right? And not being able to do away without it means that the technology will live with us forever. And then what even makes it extremely powerful is because the creator gave it out to the world for free. I don't think that so many of you understand what it means by the basis on which Bitcoin was created is the most insane thing that I've ever seen or heard. The story, unless you've never, some people talk about Bitcoin, but how many of you have sat down to really understand the evolution and the logic behind Bitcoin? You have to first read about cryptography. Once you understand cryptography, then you can understand, cryptocurrency before you talk about the matter of cryptocurrency, which is like Bitcoin. So the person created it. Nobody knows the person. The pseudonym everybody only knows is Satoshi Nakamoto. Satoshi Nakamoto, remember, is a pseudonym. Pseudonym is a name that is just like somewhat related to somebody without necessarily representing them. My name is not by one chance Kojo Forex. It's like my pseudonym. even though Kojo is part of my name, so you can a little bit relate it. But or let's say when I was in high school, I had a nickname I'm not going to mention here, but like that could be like my pseudonym. And then we had one woman who is in Ghana who's a very proficient writer. Her name is Amma Opon something. Everybody knows that woman, but it's actually not even her name. It's just her name that's used to represent her books. So Satoshi developed the whole technology, didn't finish developing it. Somebody say, I wanna know. Didn't finish developing that technology, right? And then handed the white paper of that technology out. That, look, guys, this is what I've built on. This is how it's going to work, and it's going to be decentralized. That it will need everybody's effort. Everybody's effort means that everybody can be a controller in the system. It's wholesome. Which people be sell out for this platform like that? The wholesomeness means that my CPU in my computer can be functioning in checking the records. Your computer in your house can be functioning in checking. Another people can create a whole rig and then they're going to be checking this. That's what we call the Bitcoin mining. And the mining is like a mathematical way of almost always solving, questions, or solving like a parable in the whole ecosystem of the Bitcoin. And that solving is basically like thinking of it as like making sure that there's no tool spending. There's no like double transactions going on, because that was like the crazy trouble for Bitcoin, because it is a digital currency. In digital currency, like in the digital world, like let's say I finished writing a Word document, right? Beautiful Word document, and then I copy and then I paste it, and I name this one Kojo, and I also name that one Joko, or I name the other one, let's say Ma, and I name the other one Ba, and then you come and I show you the two documents and I say, tell me which one I created first. Chances are you'd be wrong. I don't know if you understand the logic that I'm saying. Imagine that I just write a Word document and I save that first one Ba, and I say the other one Ma, and I say, tell me which one is the original one. You're not going to be able to tell. So in terms of solving the aspect of the double spending, that's just how they came about. That mathematical aspect that solves it. And those are the people that we call the miners. Having those rigs that are continuously going to be checking, that every transaction is independent and unique by itself. All this technology is being done, and in control of us. And then the insane aspect, I've not even come to the insane aspect. The insane aspect is the creator also limiting the supply. The supply of Bitcoin as you have it is 21 million, which means that there is not going to be more than 21 million Bitcoin ever created. The market capitalization of Bitcoin is only by the speculative price by the 21 million. It cannot change. If today Bitcoin dropped from 104,000 all the way to $1, the market capitalization is still going to be $21 million, which is the $1 times the 21 million supply. I don't know if you understand what I mean. Maybe I'm going to finance. Maybe I'm going to. You tell me if I'm going overboard with my information. I'll just stop here. If you're enjoying it, to let me know so that I just keep up with it. Right? Are you following? Let me know quickly before I just lose interest in continuing the conversation. But if you're enjoying it, you tell me. So I'm saying like the market capitalization, right, is the supply versus the market pricing. The supply is 21 million, and then the market pricing is the speculative price of it. So we say Bitcoin currently, I don't know, multiply $104,000 by 21 million. You tell me how much is sitting in Bitcoin now. So that 21 million currently is only 20 million. I know it's what? Is it 19 million? I don't know. You can check. You can fact check that. Either 19 point something million that is currently in supply, right? Or probably like 20, which is in remaining 1 million. The 1 million is the reward for those that are going to continuously be mining, and then the reward they're going to be getting. And that reward every 4 years is divided into two, which we call the Bitcoin halving, right? Because if they're supposed to maintain the same, if they're supposed to maintain the same reward for every Bitcoin transaction you solve, then the reserve was going to finish. So they kept on halving it but the halving is in sync with the speculative price, which means that even though, let's say last year you have one Bitcoin, which was, let's say, equivalent to, let's say, $50,000. Today, if you have half Bitcoin, it's equivalent to the same worth of 50,000, because Bitcoin is no more 50,000, but what, 100,000. I don't know if you understand what I mean. So it's not disincentivizing people that are producing, or people that are setting up their rigs to continuously like mine these coins and make some commissions and money and reward from it. And then if you check the calendar for the halving, the last half is probably going to end in the year 2130 or something. And I doubt that year any of us will even be alive to tell the end of the story of Bitcoin, right? 2140. And we are in the year what? 2020. Let's say we are going to 2025. If you do that math, how many, what's the difference? 2140 minus 2025. 115 years. If you even give birth to your child today, possibility of that child living to see the last half. This man, Kindela say, I'll be alive. I mean, you be Methuselah in brother, right? Even Methuselah would have given up by then. How old are you now? If you're probably on the average 25 years or 30 years, let's say 25. You're saying that you'll be 140 years and then you'll still be seeing. Congratulations to you in future, to tell us when you come and join us in heaven. You come and tell us how the last halving went, and not only that, but how the world was looking in the year 2140. But yeah, that's like the story of it. So thinking about all this logic, it's hard for you to ever tell that what will wake up and then the technology of Bitcoin is non-existent and then the value is back to zero. Right? If you think about all the bases that I've given you, you have to use that as a speculation. But what is possible is that because of a speculative nature, we are just not going to end seeing that troughs, which is like a new huge bearish, probably up to the 50,000 again, right? And then another rally from 50,000 to maybe another 150,000 or something, and on and on and on and on and on like that. I think we're just going to continuously see that evolution going. It is happening in NASDAQ, it is happening in gold, it is happening in US 30, it has happened in all the major, tradable instruments that we have in the world. And I think that that's just how the evolution of the thing goes. But now, if you want to make that speculative judgment of when it is going to drop next again, you don't just see that 1 hour candle, 3 hours candle, or 30-minute candle and use that to make a decision. You have to normally watch it from the monthly time frame. So if you're not watching the monthly, then you cannot make that bold speculative calls. Let's say you've seen here, right, this series of closures here. It's easy for you to tell that, okay, subsequently from the 49,000, I'll probably see Bitcoin come all the way to 20,000. Or if you've seen this wedge formation from here, right? One here, then another one here. It's easy for you to also tell that from 60,000, we are going to see Bitcoin at what? 110,000, right? You need those bigger, picture to be able to make those decisions. So currently, as we stand now, there's nothing informing, and it's not going to happen in speed of light. There's really nothing informing, as it stands now, that, okay, we'll wake up and Bitcoin is back to like 30,000 or 40,000. We would need to see it go through the same, churn or the same kind of cycle again to make that decision. Anyway, guys, reducing it back to the 4 hour, then like I said, I'd want to see Bitcoin trade up toward the 130,000, probably before this week ends or next week or something. But this brings me to the end of our technical analysis and live trading. And I think it's probably also going to be the last one for the year And I hope you guys have really enjoyed these sessions. You've learned a lot, and hopefully I get to see you again the same time next year, on and on like that. I'm always, as usual, going to be doing the announcement. But yeah, so far so good. Give me a brief basis of your experience in these sessions. How have you enjoyed it so far? Counting down on the close of the year. How impactful has it been for you? Have you loved it? Is it impressive? Has it changed the way you look at the market, the way you think, the way you see certain things? Just a quick one. And what do you think can be done right? You also chip in that as well. What do you think that it could have been better? It could have been better if done in another way. Any brief one? Somebody say really informative, amazing. Make sure to subscribe to Exnexus Trade channel, and then also follow me on all social media, KOJOFREX. Okay, guys. So last one, somebody says share the site where I got the fundamental event. It's called Trading Economics. You can go and look that up. Thank you for joining. I think I'll bring this session to an end here, and I'll see you guys when we happen to meet again. Right? Take care, everybody. Happy New Year or Merry Christmas, and I wish you a pleasant holiday.